They're never going to cut spending ever. And the tide of inflation cannot recede.
Inflation is not going to stop. It's going to erode our purchasing power. We have got to make sure that the money that we are saving and investing, specifically in that growth bucket, is allocated in a way that's going to get the compound interest in a way that significantly outpaces inflation.
Right now, real estate prices, they're still very high. Buyers aren't buying. How are you navigating that?
I think many people can really obsess over what's going on in any individual one market. And you can burn a lot of calories in trying to research a certain market and find the best buying opportunities. If you want to get really good buying opportunities, you need to go.
Hey, what is up, everybody? Welcome back to Remnant Finance. Got a one-on-one show today, myself and Scott Osborne, our four-time guest. I think this is the fourth one we've done, right? Last time we talked about tariffs, and so That was the big news cycle story that has come and gone. And we saw a lot of turmoil from the announcement of the tariffs, and then as it kind of rolled, as everything shaked out, it seemed like we've recovered from that, and we're the market is basically just whipsawing as tweets come out. Basically, is sort of how it feels. But what's new, Scott?
Not much, man. Just gearing up for summer here, and I had my first daughter graduate, which makes me feel completely ancient, and I still got a second grader, so it makes me feel like I'm going to be completely ancient by the time she graduates. So
yeah, Scott's got 7 daughters, so that's
yeah. I mean, if you just keep bringing them around or having them, obviously you're going to end up with some sort of age gap. So
yeah, there you go. Well, that's how it works. Brian is in Estonia right now. He's doing took an assignment with the Guard, so he's out there having a terrible time in Old Town Tallinn, it sounds like.
The pictures he put on Facebook made me realize, again, I should have joined the Air Force, not the Army. But,
yeah,
that's cool.
I actually grew up for a couple of years in Finland when I was a kid. And
my
elementary school class at the International School of Helsinki, we would take day trips to Tallinn, and we'd hop on the ferry and go over, spend the day in Tallinn and go back, or do the same thing in Stockholm. And such a cool experience. I haven't been back as an adult, but I would love to get back there. My sister and my dad went back to Helsinki and saw our old house last summer, which was just really, really cool. So,
and it's wild over in Europe too, right? Because it's the countries are so different, country to country to country. If you go on a train ride from Venice to Budapest, very different culture, language, food, et cetera, et cetera. You drive from Toledo, Ohio down to Indianapolis, Indiana, and you're like, there's nothing different. You know what I'm saying?
Yeah,
so
sure.
It's very interesting, just how different it is, country to country there. So I'm sure that was a cool experience for you.
Yeah, it was awesome. We did a couple of years in Finland and a couple of years in southern Belgium as well. That was also really neat because, within a 5-hour drive, you're in, I can't even remember how, 6 or 7 different countries.
Yeah.
Totally different experiences. So it was a really cool time, being a child there. And I really want to get back as an adult. One day, right now with a 4 and a 1-year-old, traveling sounds like a nightmare.
Yeah.
Our 1-year-old can't sit still for more than 10 seconds. So flying across the country and then across the ocean, it's just not in the cars. But when they're a little older, we're definitely going to go and get back there.
We took like a decade off when the kids were young. And then we just kept having young kids. We're like, well, we got to go eventually. So we just endured the suck and went. So.
Yeah. So much has happened. And like I said at the beginning, things are changing so rapidly that this tariff discussion, which was enormous when we talked maybe 6 weeks ago,
has
pretty much subsided. It sounds like they've got kind of tentative deals in place. A lot of it was mostly just posturing and some bluffing and art of the deal, I guess. I go so extreme that what you settle on seems to be reasonable. The markets have sort of priced the tariff uncertainty in. It seems to have come and gone. We've got another major current event now. It seems like a legit actual hot war might be brewing, and we may or may not be getting involved. But the market took a pretty good hit on the first wave of the missiles between Israel and Iran, and I imagine that might continue. But the point I want to make, and I want to ask you about, is less on that. It's more on the DOGE cuts or lack of DOGE cuts. Mm-hmm. What we saw was the richest man in the world with essentially an unlimited budget and a strong apparent desire to cut a ton of money out of federal spending. And we got the headlines we saw laid out on the carpet, everything, how much fraud, waste, and abuse is going on in the spending. And fast forward a couple months later, that's pretty much gone. That DOGE is not in the news, probably won't be again. US aid is probably, recovered about 80% of what was supposed to be slashed. So my takeaway from this is there is no chance, 0% chance that the spending by Congress will ever go down, because it wasn't just, Democrats that were fighting him. It was Republicans too. There's no difference in spending when it comes to Republicans and Democrats. And we saw that as evidenced by, okay, here's all the cuts we're going to make. We're going to trim the budget. And then the Republicans say, okay, well, let's add it to the defense budget instead. And here's this beautiful $1 trillion defense budget. So they're just taking a same expanding pool of spending and shifting the ratio of where that goes. But the takeaway for us, and as we're trying to, read the tea leaves and strategize and plan for our one shot at this game, which is getting, achieving our goals in our financial lives for our families, we need to figure out what makes the most sense to do with our assets. And so that's where you come in on the growth side, because if they're never going to cut spending ever, then it doesn't matter, there's going to be printing, there's going to be continued creation of money, and therefore prices are going to go up, therefore assets prices are going to go up, and the tide of inflation cannot recede. And I've made that case in the macroeconomic sense on some episodes before, but the inflation cannot go down, the tide cannot go down. So if the tide's going up and you have a leaky boat, you're not going to rise with it. How are you having this conversation with clients? Because your side of this strategy is to patch up the boat and make sure that it rises with the tide at a minimum. And then, we need to beat this inflation, because it's not going to stop. If Elon Musk can't do it, no one's gonna be able to do it.
Yeah, it's interesting when you look at all the work that DOGE did. They were uncovering a lot of things, but I think what's really, really challenging when you're dealing with the bureaucracy, and you and I both know this from our time in the military, these processes, many of the people, but definitely the processes, the systems, et cetera, none of them were hashed out and created overnight. I mean, this is like decades of, intricacies of things that rely on each other. And you look at the Department of Defense as an example, and then each system that the military is using, as a pilot, as an infantry guy, I mean, you're logging into, an incredible amount of systems to just do your job day to day. I mean, most civilians are probably not super familiar with just the amount of sheer logging into things that you're doing. I mean, payroll, managing your TSP, looking at your earnings statements, looking at supply chain stuff, looking at maintenance items, personnel, training. It's all a different system, let alone email, calendar, ordering ammunition, whatever the case is. I mean, it just seems like it never stops. And that's just the military. And so to think that somebody's going to go in there in a short period of time and be able to see where all the waste is and how to make it efficient. I mean, Elon is, I think he's got some, incredible aptitude, obviously, with many of the great things that he's done in some of his companies. But, you look at Tesla, I mean, he's sleeping on the manufacturing floor or sleeping in the plant to get that up and running over a course of years. I mean, that's like the blood, sweat, and tears that it took in a company that he was, around, in a very new company that you're building the culture right then. Man, you're not going to come into the government with, it's just so huge and it's been built up over so long. It's just not going to change that quick, unfortunately. Now, I do think hopefully they highlighted some items that, they can do something about, but, Rand Paul's been talking about that stuff every year with his, whatever he does, his 12 days of Christmas thing or something like that. He does his list of, all the things that we're wasting money on, and try to bring that light to the fact that, hey, these are not in the best interest of the American people. That said, I'm a huge advocate of voting for the people and policies we want. Many times who you get to vote for is you're not going to get a candidate or party that represents all of your individual interests. At the same token, if both parties are going to continue to spend and continue to use debt to, grow the economy, quote unquote, through government spending and whatever the case is, you're going to have a situation, to your point, Hans, that inflation is not going to stop. It's going to erode our purchasing power. And so if you look at a lot of successful people, they are able to out earn the ravages of inflation, I'll say, because they're getting promotions at work. They just have a high enough earning job or whatever the case is. However, when it comes to retirement and you eventually are going to live off of your retirement savings, you lose a little bit of that ability to, increase your net income at the end of the day because, you can't go get a promotion or whatever the case is. You can manage your investments well, but that's about it.
Mhm.
And to your point, if we let the government's policies drive us to a position of, maybe for some people it's fear, but for some people it's like, hey, I'm going to wait until we have a little bit better policy in the White House to get involved with investing for my future. It's generally not a good practice. Most people have seen the graphic. I'll send it to you so you can share it with your folks in the bio or in the link or whatever. But there's a graphic out there that shows all the presidents, and you're going to see ups and downs, right? And long story short, this thing is going up and to the right.
Mhm.
So we have survived an incredible amount of conflict over time. Do you know how many conflicts with fill in the blank country and Israel that we have just not even batted an eye at from an economic? And this is like every couple of years. This is not, it's hardly newsworthy. Now, Iran is, new in the level of intensity of the conflict. Yeah. But is that going to grossly impact how America's great companies are able to, provide goods and services and grow future earnings? I don't know. I'm not sure. We'll
Yeah.
find out. But, the odds are we're going to figure out a way. These companies are going to figure out a way to overcome whatever's going on around us. And so, to your point, we have got to make sure that the money that we are saving and investing, specifically in that growth bucket, is allocated in a way that's going to get the compound interest, working for us in a way that significantly outpaces inflation. That's the number one thing we can do to build
Mhm.
a future retirement that is going to be effective in outpacing inflation.
Yeah, absolutely. And I'll say it again because we hammer pretty hard the focus, the singular focus that people have on just investing without the foundation in place. And our premise when we approach a strategy conversation is protection and savings first, because what if you don't wake up tomorrow? What if you become disabled tomorrow and can't earn income and feed the growth system? Those to us, to for Brian and I, those are the number one and number two priorities. If you're laid off for a year because of some economic downturn, AI takes your job, whatever, if you don't have income for a year to feed your growth engine, or you're not alive to earn that income, we need to make sure that those considerations are taking place first. But as much as we push that message, we're very much not anti-growth. And in fact, I'm a fairly aggressive in my growth component because I feel comfortable in the protections and savings. I can be much more, I guess, adventurous in how I try to grow my capital. And so we never want people to get the impression that we are saying not to grow your money. And in fact, it's now more imperative than ever to recognize that the spending is not going to change, and we have to continue to be ready for inflation to continue. I'm going to do an episode soon, probably on Henry Hazlitt, his Economics in One Lesson, which is a fantastic, very simple economics book. One of the points he makes is that every government spending, every dollar the government spends is taxed either directly or through inflation. They're not raising taxes. In fact, they're cutting taxes, which isolated is a good thing. A lot of what's coming in the changes for the tax bill, I would say on net, of course, there's a bunch of ridiculous things in there. There's a bunch of great things in there, like most bills. But on net, I would say for us, it's actually a huge improvement. What seems to be the final iteration or soon to be final iteration of the coming tax bill. I would say overall, it's better for those of us who are small business owners, who are having children. Like a lot of our audience probably are going to be just in a binary better or worse equation. They will be better off with this new tax bill than they were before it. I think that the tax portion is a huge aspect of it. But what is one of the net effects is that the tax they're talking about how much they're going to slash in taxes, and if it's supposedly supposed to be replaced by tariffs, I don't think it's going to be. But if they're slashing taxes, that is good for us. But that just tells you that that's still government spending and increased government spending, and so the rest of it has to come through inflation. So if you think of whatever the total amount of the annual budget is, the rest of it that's not compensated for by taxes is inflation. Now, there's a component of it of Howard Lutnick trying to monetize our assets, which would bring in a large chunk of revenue, which would offset that as well. But currently, that's not really happening. Land valuation, gold valuation, et cetera. There's things that they can do to monetize our debt and actually make it income generating. But in the meantime, the inflation is going to continue to come.
Well, and you have to look to it at like, what does inflation lead to? It does lead to higher prices for us. However, it also leads to typically that inflation is coming from companies raising prices. So if prices are up, typically earnings are up. And so, it does have an effect over, and all the S&P 500 as an example is a representation of earnings growth. I mean, when the market's overvalued, it's because it's above the earnings growth trend. When it's undervalued, it's below the earnings growth trend. It's pretty simple from a finance standpoint. However, if I got to go to the grocery store and, well, let's be honest, it's Andrew going to the grocery store. If Andrew's going to the grocery store and she's picking up all this food from Meyer for our 7 kids and then a little bit for dad, she is going to pay those higher prices, which are about 25% higher than they were a couple of years ago, by the way.
Yeah.
Now, I don't have a choice. I can't make those prices go down, right?
Mm-hmm.
We are going to have to pay those prices. Now, if those prices are going to manifest in that grocery store chain's earnings being higher and their stock price is going up, and then I'm not participating on the other side of that equation, that's where I'm really starting to hurt myself, right? So the inflation we can't control. We're going to have to pay the higher prices. And to your point, if you look back, the only times we've had, deflation are when we've had in, gross, deep recessions, if not depressions, I would call it. So through the 2008 collapse, I mean, we had flat. There was maybe like a quarter of deflation in there, but it was basically flat. And so, we want to see a little bit of inflation. That means that the economy is growing and, it's all tied to, the broader economic status of, how many people are working, how many do we want working, et cetera, et cetera. But at the end of the day, in terms of like, what do we want to be involved in? We want to be involved in owning assets that are going to also, outpace that inflation too, because we're going to have to pay it. There's no choice there, but we can choose how we invest our money. And we want to make sure that we're, reaping the benefits of rising costs too, through owning equities of companies that have, continually increasing earnings.
So how are you positioning your clients, or I guess we're not going to give blanket financial advice because it should be specific to the individual, but in general, are there sectors that you're focusing on? Are there asset classes that you're emphasizing more? Is there any kind of warnings? Like right now, real estate prices, even though they're much high, they're still very high. Buyers aren't buying. It's a buyer's market right now because people are still attached to the price they thought they might have gotten 2 years ago, and they're going to have to come down on that price. So there's there's always going to be some ups and downs. So how are you navigating that as you're having that conversation with generic client?
Kind of keeping it at high level, I will say this is one of the benefits of diversification. I think many people can really obsess over what's going on in any individual one market. And you can burn a lot of calories and trying to research a certain market and find the best buying opportunities. If you want to get really good buying opportunities, you need to go into like hard real estate, right? Because like hard real estate is not an efficient market. It's very inefficient, right? I mean, you can have 2 homes right next to each other in the same market, both for sale, but it's the nuances of the age of the roof and the quality of the landscaping and whether they owned a pet before or not and all that jazz that makes, the price higher or lower for one piece of real estate or the other. So that's an inefficient market. But, when you look out in the open exchange of stock markets, stocks, ETFs, et cetera, it's a pretty efficient market, meaning everybody's, investing off of the same information. So, the one of the benefits to having a good, aggressive, diversified portfolio is that you don't have to burn a lot of calories researching what sector you think is going to be hot next. Because I'll tell you what's going to happen. First of all, you're probably not going to time it right when it is going to get hot, right? So a lot of the professionals on the street that are doing this are being very speculative. And so a lot of what you see in the market today is already factoring in future assumptions. Now, when you have the president of the United States coming out and tweeting something that's, drastically changing future assumptions, yes, you can see the market react very, very quickly. But, a lot of what's going on in the Middle East right now, I'd say is kind of baked into what's going on or what
Mhm.
prices we see in the market right now. So if there's an escalation in Iran, could it impact the market? Yes. Is it going to be a huge impact? Probably not. But back to the point around diversification, the other challenge I would say is that if you start to research certain investments, certain stocks, certain asset classes, certain sectors, if you really dive into like emotional investing and behavior based investing here, Hans, you'll really start to see that people will start to form their own bias and their own narrative. So if I spend a bunch of time researching oil and the history of oil during conflict in the Middle East and all that, I'm ignoring a lot of other data, right, by researching that. But I will also start to form a bias about what I'm researching and why it's really good for me or why it's really bad for me, one or the other. And what we find out is through that, cognitive bias that I start to create for myself, I can really make uninformed decisions that are not tied to long-term data. And candidly, you have no idea if they're going to be effective or not short term. And so it can really be a challenge, to be out there trying to catch the next hot asset class. So the thing that we will typically do when we're sitting down with folks is really looking at their broader plan and making sure that we own the right assets that we want to own for a long time, making sure that we got the right amount of cash flow, building our safe bucket, that we like we do with you guys, making sure we have our liquidity needs meet, making sure we have our protection plans in place, and that we're doing the right thing with our cash flow to serve all these different masters. But ultimately in the portfolio, if I own a good diversified portfolio, I can take advantage of buying opportunities when they come through a disciplined approach versus a speculative approach. A speculative approach is going to say, hey, I'm looking at what's going on in the Middle East, and therefore I know that oil is going to go to the moon. So I'm going to buy a bunch of oil company stocks or whatever the case is, or hey, historically bonds have performed better in, times of Middle East conflict. So I'm going to buy bonds, ignoring the fact that, interest rates and earnings have a lot to do with bond pricing too. So I can start to get a bias by not looking at all the factors, right? And so, if we have a good diversified portfolio, and this is we were very busy during the month of April, where you saw the market just getting driven down from a lot of the Trump tariff policies coming out. And then we're able to, hey, I don't really care too much about what Trump is saying or what the president's saying, because I can't control that. But what I can do is look at where the market has drastically gone down very quickly. And then we're taking some of the dry powder, putting that to work. And then when he's making a tweet, if you're trying to go, in the middle of your vacation because, oh, he just tweeted something, and now while I'm on vacation, I'm going to log in and do a bunch of trades, or, now I'm trying to do something, you've already missed it. I mean, we saw the market go up, 12% in 2 days. It was crazy. But if you are following a disciplined plan and following a disciplined, approach to how you're building your portfolio and rebalancing it, either calendar based or event based, there's some things that you can do there that, dude, I can't tell you it's going to be the best thing for you long term, better than owning Nvidia stock for 20 years. I don't know, but I could tell you it's pretty effective. It's a heck of a lot more effective than, researching all of your own sectors and develop your own bias and, try to build a 30-year plan off of that. That's pretty challenging.
It speaks to the volatility and the short term focus that you have to really overcome that. And so if you're continuing to earn income right now, if you're working, you're getting a paycheck, you're living off of the paycheck without any issue, and then you are effectively saving and then growing that, you don't really need to be tracking. If you have a system in place, you don't really need to be tracking daily news. I have my portfolio and I basically have it on autopilot, where every check that comes in, percentage of it gets distributed to different buckets, and I keep track of it just to get an idea of my overall allocation between different types of assets. And I'm not just talking about different sectors of the stock market, I'm talking about
Right.
broader asset classes. And so it automatically goes in, but I don't make decisions based on what the total value of that, my equities chunk right now, my Forex, my rental properties, gold. Like, I don't make decisions based on what they're valued at right now. I make decisions based on their percentage allocation of my total portfolio. I might change if it gets beyond the bounds of what I've set as my goal for, X amount allocated to tech moonshot, like
Right.
having that 1% little speculative investment side, having a heavier weight on, for me, I'm pretty heavy on cash inherently just from doing IBC. But I think if you're able to take the long-term focus and say, hey, I just turned 37 a couple of days ago. So I'm 37. I've got another 3 decades before I'm really thinking about, you know, I have, adult children and grandkids. And if I retire, I don't plan to retire, but if I do retire, like when I'm in that phase of life where I want to dial it back a bit, take the foot off the gas, is this going to get me where I want me in 30 years? But I don't really need to stress about the actual asset values day to day. And this tweet sent oil, plunging and then gold up. And so I'm not like going to go in there and sell a bunch of gold and buy whatever. It's just kind of as long as you're a strategy, you're fine tuning the strategy itself and the allocation. And that's where if someone's not doing that already, that's where you should come. You should go reach out to Scott and set up, because you can do that yourself, but most people don't have the time or the interest of doing that. There's value in someone who is like yourself, who is constantly monitoring. You're the one, you take that beating of all of the news cycles, and like if people are working with you and they have their assets allocated across, how you have them positioned, I'm sure that they can, make inputs, to how they want it to go. But it's also a good way to have sort of a hands-off approach. Like, percentage goes in, distribute it. You're the one keeping track of all these developments. People generally don't need to be as on top, I think, of individual stock sector performance and volatility if their long-term plan is solid. So set up your long-term plan. And if you don't have the bandwidth or the knowledge to really do this tracking and make sure that everything's, fine-tuned, that's where you really want to reach out to Scott and get something set up, because you need a 30-year vision, not a 1-year vision.
Yeah. And I meet people frequently who are coming from all walks of life. I mean, I always use the example of my dad. He's a hardcore do-it-yourselfer. Like, he generally would like die before he's going to pay somebody to put a roof on his house or mow his grass or something, And then you got other people who are like super delegators, right? I mean, I work with a lot of executives, a lot of pilots, and a lot of those guys are like, hey, I mean, even if they're completely, or have the ability to be completely proficient, it's a time thing. It's a desire thing. It's like, dude, I make enough money. I got enough assets that I can afford to pay a professional, that I don't need to worry about, checking the market cycle for rebalancing while I'm trying to, pick up trips or run my business or whatever the case is. I don't want to be doing this stuff on a Friday night instead of spending time with my family. So there's definitely an aspect of delegation too, that, I mean, there's a lot of the executives I work with here in town. I mean, for whatever reason, like 80% of them are all finance guys, but they appreciate the ability to delegate to somebody who can implement like to their standards of what they envision, of how these things should go. And to your point, it's more about like building a system and like having that system work for you. And so, that is a lot of what we do, right? We have a very specific system that we're doing for folks, and we're doing it for a lot of different people. It's custom for each person, but the process is very, very similar. Do you want to build your own system and guinea pig on yourself? Maybe, it's up to you. But I think it's something that if, you're a hardcore do it yourselfer, it's worth talking to somebody, just to check for blind spots more than anything else too. Even for me, like, I have a planner that I work with because I want them to check. I want a neutral third party to check for blind spots in myself and eliminate my own bias. You know what I mean? So the older I get, the more I value just being able to delegate things out and know that the expert is, using their process that they're using hundreds of times a year with all the people they're doing, and saying like, hey, you're doing this and that doesn't fit the mold. Why are we doing that? And be able to double check, So I don't know. It's valuable to get a second eyes on what you're doing, first of all. And then regardless of what that is, taxes, IBC, your life insurance situation, your investments, whatever the case is, your estate plan. And then also I think there's value at times if you're at the stage in life where you can, afford to delegate it out. The more higher earning you are, the busier you are, the more demands on your time typically. And so, there can be a good time there to bring a professional on and give you a hand. So,
yeah, absolutely. And we talked to Neil from Tax Sherpa 2 episodes ago when this comes out. That was our second conversation with him. I made the point that I've been going through the tax code and doing my CLU certification and really deep diving into all aspects of tax code, especially particularly how it pertains to life insurance. But I feel like I have a pretty good understanding of the tax code, but I know just enough to be dangerous in trying to do it myself.
Yeah.
And it's like, I feel like I could have a grasp on it, but then I'd start talking to Neil, learning about these different strategies. It would be such a lost opportunity. I would be missing out on so much potential to optimize by trying to do this myself. And so I want to keep learning about taxes, and I want to understand what he's doing as he's addressing my tax situation. Best case for me would be that I can read through the entire thing and be like, oh yeah, I see what he did here. I see what he did here. This makes
Yeah.
sense. I still don't want to do it. For me, with IBC, we get, almost no clients. I can't think of any clients who come to us who have been doing this for a long time and get it, and this where they were just kind of born into this, or it made sense from the start. Everyone starts from generally from a position of being antagonistic the whole life and having to really break some molds to come around to this way of thinking. That's all, I mean, myself included. That's pretty much everyone's experience with this that I've interacted with. And so I've got clients now. Once you get excited about this and you start learning, I've got some clients like Will Light. He knows probably as much as I do about this, but he's still a pilot in the Navy, and he's got some land flipping that's going on, and so he's got his own thing, and so he's very well read on this. But he's still going to outsource this task because this is my very specific niche that I feel very well suited to perform this role for my clients. But I'm not going to be their investment advisor, and I'm not going to be tracking bond yields and stuff to the degree that you are. And so it's just having this kind of ecosystem where you continue to build your knowledge, but also recognize where there's value in collaboration. And one thing I want to ask about, shifting gears a little bit, is if you've used or seen any impacts from AI in your field. And I'll say that I've been doing some basically AI automated, trading platform just as a test for myself, just to see. And what this is Forex, and it's basically just monitoring volatility up and down. Yeah. It has the ability, every 25 seconds it's refreshing and finding these minute arbitrage. And so it's just making tons of tiny trades with lots of small amounts of profit. And it's generating about a 1% per week return right now. I'm still kind of testing it out, dipping my toe and starting small just to kind of keep learning, because I've never done Forex before, but so far I'm absolutely loving it. And it's something like I'm trying to learn as I go. But in the meantime, because of AI, because of this tool, I'm able to just make money in the background. And I know if you're not embracing AI in your business, it's going to leave you behind, because the developments are so astonishing right now. So have you seen anything on the AI front with how you practice, anything you've implemented, or what the market or the industry as a whole is doing on the CFP side?
I think on the, in the industry side, it's a very interesting discussion. I do think you're going to see it, negatively impact a lot of larger firms. The reason I say that is because I think there's a certain level of bureaucracy sometimes with certain firms, right? Mm-hmm. Slow to adopt. And I think if you're slow to adopt in the AI space, I think you're going to really get hurt. So I think you're going to see a lot of, large firms where, the executive team who's not dealing with clients and not having to bring on clients, et cetera, isn't too concerned about it. And it's going to lead their advisors to fall behind. Like, I know on my end of it, one of the things that I've really loved about it is, I think it's going to enable advisors to serve more clients because of just data management, the streamlining of data, getting to answers quickly, customer service, things of that nature. But I think on the trading side, I think it's going to be really interesting, right? So if you think about somebody looking at AI and looking at trying to, maybe let's say build a portfolio off of AI. One of the challenges is that, first of all, AI is, if you use AI like a Google prompt, it's going to kind of give you Google answers. So there's not a ton of information, in Chat GPT that's not already on the internet. I mean, if you put a prompt into Chat GPT and say, hey, I make this much money, and, what are some tax strategies I consider? Go punch that same thing into Google, you're going to get the same kind of information. So I think information wise, there's not a ton there that's going to be different. What people need is not more information. This has been the case for the last decade. They need more insight. Okay, how does that apply to me? How do I have a good conversation back and forth to get me to a good decision? And then I go also get the implementation done. AI, I think, eventually will be able to help with implementation too. And so that's where I think, again, on the advisory side, I think things getting more efficient with, implementation is going to help clients get a better experience. Things are going to get done to a higher standard quicker, less mistakes. I think all that's going to be good. On the trading side, I think it's going to be really interesting to see how, a lot of the trading technology has continued to evolve significantly with different kinds of products and different types of technology. And even you look at, just how the markets are actually traded in different spread prices, and based off of the deal you can get by buying blocks, or different custodians get different pricing. It's going to be a dynamic environment from a technology standpoint to see how AI starts to really impact that. We talked earlier about markets being efficient. I think AI is going to help markets become even more efficient. And so again, with the thing you were talking about with making these small margins, as more and more of that starts to come up, that efficiency gets spread across the market. So there might be some early adopters that leverage some weak points in the market. Those will go away within a certain band of time, right? And so I actually don't think it's going to create any significant market advantage for some people. I think some people that are maybe an early adopter to a certain technology might benefit. Long term, to the long term investor, I think it's negligible. I do think it's going to help, trading companies again implement things more efficiently with less errors. We've custody at Schwab and Fidelity. Right now they're working bankers hours, let's say, so AI doesn't need to take hours off. So I should be able to place trades, in an easier fashion than if I'm a DIYer and I do it on the Schwab or Fidelity platform. It's not the easiest. You know what I mean? It's not the easiest to go in and place trades. If I could do it through an AI bot, that like I was doing it with an agent on the phone on a Saturday night at midnight, that's going to be a good customer experience. So I think there's going to be some things there that are beneficial for sure. But, in terms of like, hey, am I going to find some AI app, trading app that's going to, unlock all sorts of returns that only I get and nobody else gets, or only my clients get? Again, could you get that for 30 days or 90 days? But eventually it's like a mutual fund, right? If you look at the Lynch advisor from Fidelity, he had the highest performing mutual fund for a long time. But you look at his mutual fund, the first 5 years, he gets a 5-year track record, significantly beating the S&P 500. What happens? So many people come into that fund, the fund goes up even more, not because the investments are better or because he's picking companies with better future earnings, but because the track record is leading people to get into it. The fund gets overperforming, and then it starts to correct. And then the people who buy in late after they missed that front end are now looking back saying, how did I get substandard returns? So I think AI is going to lead to more of that. And you're already starting to see it online, man. You can see, if you Google AI trading platform, you're going to get hit with all sorts of ads and people who are not fiduciaries, not licensed, who are selling a trading technology. They're not selling advice. And so they're not regulated. And so I think it's going to be really interesting. They can get you to buy some trading platform and, hey, go buy the Pelosi tracker, and, it'll implement all the trades for you. And then again, you're going to be left wondering, how did I underperform this crazy track record? Well, it's because all the information's coming in after the fact. So anyways, that's a little bit of the outlook I have right now. That said, it's something we're reading about a lot, because I do think it's going to change a lot, and it's going to evolve in ways that I don't think we fully know how it's going to evolve. So, we were having this AI discussion actually with one of our kids the other day, and I told her, I actually think AI is going to turn into, almost how we are with nuclear weapons, where there's a certain capability that we don't use from a weapons perspective. Like if we wanted to win the Iraq war and we just wanted the land and wanted the oil, could we wipe out Iraq with some nuclear weapons and then just take the land and then take the oil? We could, but we don't do that. Could Russia do that to Ukraine today if they wanted to? Yes, they could. But there's certain things that we exercise a certain level of restraint in war right now. We have since World War II, that we're like, hey, for the betterment of humanity, we're not going to go to this level. I think we're going to have to get there with AI. I don't think we're doing it a lot right now, but my personal belief is we're going to have to get to a point where we say AI is capable of this. We do not let it fully leverage its capability because it's too much of a risk to whatever the case is. I mean, that could be, across many different goods and services and what have you. But I think, investing is going to be no different. I mean, if there's certain trading algorithms that AI could do that could get any person who owned it to get huge returns, in a short amount of time, everybody would do that. And what would that do to the market? It would make it collapse because it's not tied to earnings anymore. I mean, do you know what I'm saying? So I think there's going to be things where we have to restrain the technology because, hey, I mean, the SEC is going to step in and say, you can't do that because it's going to mess up the efficient market. And we need an efficient market. We need downturns in the market. Like there's things that we need to have happen to make this thing work at a broader level. So you're going to get pockets of people that win, and then you're going to see Facebook ads about them, and a bunch of people are going to buy something and lose, and they're going to wonder what happened. So I could be proven wrong on that completely, but that's my personal opinion. I think it's, as technology evolves, we're going to have to regulate it like we do many other things. So
Yeah, it's interesting that you always hear the story about, the Wall Street companies that the, the traders that had the closest wires, the shortest length of wire for internet connection to the Wall Street trading desk had the slight advantage to than someone one state away getting the information a few seconds or a few minutes later.
yep.
And I could see AI eliminating that, because if you have something that is tracking every minute movement, looking for any kind of arbitrage, then they can certainly bring the playing field up of retail investors up towards that Wall Street level. Of course, if you're not focusing on it to that degree, you're not ever going to fully be there, but it is going to kind of maybe democratize the quick access that a lot of firms had a monopoly on before all this. So who knows? And I think the big thing with AI is, like, we're so early on into it, and anyone who's saying they know what's going to happen, it's a speculation. But
Absolutely.
yeah, it is something that I've been thinking that it's something you need to have your finger on the pulse of, because it's crazy. I spent a lot of time making some PowerPoints trying to explain some of these concepts, doing visuals, and now you can just say, hey, draft a 1-page visual document explaining this concept. And it's like, wow, it's way better than I spent 6 hours working on something that was worse than that. There's gonna be so many edges that you can gain just by learning it and understanding it and leveraging it. But yeah, as far as how it actually impacts the market, I think you're probably right that none of those advantages can be sustained for too long. But
not only that, but you even you look across so many companies, and so many companies are implementing AI policies, right? And they're restraining how their employees can use it, because I mean, and dude, I've been working on some, mathematical projects, and I'm telling you, man, you punch some mathematical stuff into ChatGPT, it can leave you disappointed. You're like, dude, it's not 100% there yet. I think it's going to get there eventually, but it's not there yet. And these are like net present value calculations, and looking at different interest rates over periods of time, and it's just not quite there yet. And that's not overly complex math. So I mean, you look at like a friend of mine owns a architectural and engineering firm here in Toledo, and they had to block it out, because they're like, we cannot have our structural and controls engineers doing everything through ChatGPT, because it might look good, and then when you do the double check in ChatGPT, it's like the flawed person says the flawed person is good to go, but like when they're like double checking calculations, it's just not there yet. And so I don't know. I mean, I think it's going to make people more efficient, and I do think many companies are going to have to say, hey, I don't care how old you are or how tech savvy you are, you got to get online and on board with utilizing ChatGPT to drive your own, to your point, your own individual efficiency. If you were working for me 2 years from now, you can't say, hey, boss, it took 6 hours to create this 1-page PDF. When I'm going to say, dude, I don't need you to spend 6 hours of your time on that. I'll do it myself in ChatGPT in 30 seconds. Like, what are you doing? You're going to see efficiency there. I mean, you've already seen starting to see software engineers, getting cut from certain technology companies, or lack of hiring happening. Same thing in Hollywood with, some of the creative side, but I don't know. I mean, I think it's going to be something like that. Does the whole world want to see movies created by AI, or are we going to want to see real people too? You know what I mean? So I'll give you one little quick story, because I'm sure you don't want to talk about this the whole time. We were in Chicago over St. Patty's Day for my daughter's birthday. Chicago was one of the top 3 places in the world to celebrate. They turned the river green. It was just incredible. It was a crazier time than I imagined. I'm 41, and it was like you were at a college campus. It was like all college kids. I'm like, holy cow! Like, the demographic was really young. Well, dude, there's this group of like 20 college kids right behind Andrew and I and the girls, and they all had cameras, regular digital cameras. And I asked one of them, like, hey, why do you guys all have cameras? They're not using their cell phone. And she was talking about how, like, at least in their little pocket of friends, and I think you're seeing it more and more, they don't want to have their phones out. They don't want to get distracted from notifications and social media. And people are starting to go back to, using a digital camera and going back to their laptop and putting the SD card in or the USB cable in. And so you're already seeing like some certain trends out there where people are not, better technology exists, and they're choosing not to use it because of, the kind of experience that they want to have. So I don't know. I mean, I think it's going to be, I tend not to be an AI doomsdayer. Like, I don't think it's going to turn into Terminator. I don't want to live my life thinking like that's going to happen anyways, but I think it's absolutely something you got to get on board with, making your life easier no matter what you do. And it's a great way to what you were saying earlier, about competency. Like, even if you're going to hire out certain aspects of your life, I don't care if it's cutting the grass, fixing toilets, somebody managing your portfolio, whatever the case is, you should be informed. Like, you should know what your investment advisor is doing. You should understand the policy that you're purchasing from Hans and Brian. You should understand the tax strategies your CPA is recommending and asking your advisor to implement for you. You should understand them. Maybe you don't want to do them. Maybe you can't go teach a master's level class on them, but you should understand the fundamentals behind it. And ChatGPT can absolutely help with that, right? Help with getting your individual competence to a level of to help you get comfortable to make a decision in your best interest. If you got a contractor that wants to do something major to your house and you look it up and try to understand why, and then a lot of it checks out, that's helpful, or it might even give you some good questions to ask or whatever. So I think it's absolutely something we want to use to, improve our efficiency, our proficiency in certain things, give us, fundamental levels of competence. But, again, I don't tend to be a doomsdayer with, what the future of AI holds for us.
My takeaway is it's a good time to, one, keep your head on the swivel because these are fascinating times, but also just be conscious of the fact that things are going to continue to change. The markets seem, at least the federal government seems totally incapable of cutting spending, and therefore, if that tide's going to keep rising, you need to inspect your boat and make sure that at a minimum you're at least rising and maintaining with it. And you can do that by reaching out to Scott, getting your growth component of your financial strategy squared away. We'll put his booking link in the notes below. But anything else you got before we wrap up? I got to bounce here in a second.
No, man, thanks for having me on. And again, it's just coming back to develop the plan and get a process for implementation and do it. I mean, it's pretty simple, and we don't want to overcomplicate it and get in our own way and step on our own feet, but plan, process, implement, plan, process, implement, get it done.
Love it. All right. Well, all right. Until next time. Well, I'm sure we'll have you on for number 5 before long. So, all right. Good talking to you. All right. See ya.
Cheers.